Good morning, everyone, and welcome to the European Cross-Hub webinar. And bear with me. Let me just go on and start up my Reuters feed. And I actually forgot to set the alarm. I was up a little bit late, not that late, but we will go on and take a look at the Nasdaq and I'll let you know what's going on there. Let's jump into there. I got the Reuters feed going. Well, tell you what, let's go on and take a look what we have. And that's for economic data, so bear with me a moment. So we did earlier, that was about a couple hours ago, we did get German retail sales, which came in a bit stronger here at 2.6% versus expected 1.2, and year over year, 8.2 versus 5.9. And just taking a look here at the dollar index, which is actually holding not too far from when we had bias chart support that I listed for in the Asian session, so bear with me. And we did get Italian unemployment that just came out. Came in at 9.8%, pretty much in line. They were expecting for 9.9%. And at the top of this next hour, we'll have a Eurozone Producer Prices Index. And if we roll into the States, we will have ADP. Hard to believe we're already back to employment data, but we'll have ADP at 8:15 Eastern. I'm in the Central Time Zone, so that's why it says 7:15. So it'll be 8:15 Eastern, along with Canadian labor productivity at 8:30. And then we will have ISM New York index at 9:45 with business conditions, and that will be it. And let me go on in. Let's go on and go into the Nasdaq, and then we'll pull up the S&Ps. I'll show you what I'm looking at. I did go on and share this in the chat room late in the afternoon, and if you see here, I'm not so much worried about this part. But what I'm looking here is potentially if this came back head and shoulders, although this would be kind of a wide head, so we'll see whether or not with this drops back. But we do have resistance. I came in right at 57. I actually was gonna put a limit there and actually put my limit. I got a little bit greedy and put my limit up here. I think it's 62 or something. So we'll see whether or not that comes back up here. But looking to see whether or not this pulls back. But we're still kind of holding here, but we did make it up to 57. Now I was looking at the 2-hour chart, and that was going to come in right there. You see that? And that would be 47 right there. There you go, right there. 58.50. And I thought, well, if you look at it here on the 30-minute, it potentially could get right up in here to 64.25. We'll see whether or not that comes to fruition. But this head, if that were to be a head, is getting a little bit long in the tooth here. But I was looking at that for this, come back down. But this head is kind of stretching out a little bit further. So, I just want to let go of that. Just pulling it back a little bit too far. But anyway, getting back, real little recap of where we are. So this is where we came in on Sunday. And if you remember, I had that bull flag. And I was looking for a target of 12,332. We made it to 12,337. And then we faded. This was in the Sunday session, and then we really hit these lows in Monday. And then what I did was I did a 127% extension, which took us, I think, right in here, and we pulled back a little bit, but not enough to say that was a good pullback. So then that opened the door for us to go to the 161%, which we did. So, shoot right here. Hence, we got the 491. Right there. And if you pull this to match it, there we go. And hence the 491. So we did go in and pull back. We did get a nice gravestone doji here. And I did go in and participate a little bit here in the Asian session, but I thought this was about as good as we can get, and I was looking for this move down here, and that would have given us right around 406, and we just about made it right there. And then with this rebound, I thought, okay, well, if they can pull back up, and I was debating, well, how much further can they get? So I was thinking, how about 450? 450, and I said the 457. I thought, well, maybe they could make it up to 64. I kind of doubt. I go, well, on the 2 hour, it wouldn't suggest that. But anyway, so I got a little bit greedy on the entry, but we did come off a little bit. Let me see from here. And we've only pulled back a little bit. So anyway, that's where we're at. We'll go and look at the Big 8 and see whether or not we can still see a further pullback from where we are and how that kind of sets up. So now let's go and take a look at the S&P in the same context. And you can see here on the 5-minute, we are above both the same day VWAP, which is a blue line, and the brown line, which is going to be the 2-day VWAP. I have kind of reconfigured things a little bit, and I'll tell you why. So I did have the 5-minute here, and then the 30-minute 2 hour. But what I found was sometimes, like what happened on Monday, I end up not seeing the forest for the trees, which I was looking for a pullback on Monday. But then, when I look on the 5-minute chart, everything looked, was so, like I said, the forest for the trees. I ended up missing a big chunk of this opportunity. And so what I liked about the 30-minute is it gives me a little bit better context. Still have the 5-minute right here, and then the 2 hour, and I can see things play a little bit more clearly. I'm still basically scalping or short-term trading, but I think you can see this play out a little bit better here, which I use like in Asia to put on a trade. But anyway, that's where we're at. Let's go and take a look at the S&Ps, see how that looks. And we'll go to the 30-minute. We're actually in a sell mode, if you see that here. And then resistance would be right here. Or I should say key level right there. Look. Right there. You can make the case there's some resistance right here. But the key level for this market to get would be right there. That would be 36.64. Let's take a look at what it looks like on a 2-hour chart. You can see here that they came back and they held this 36.50 and they're holding so far. And here's the key is that it still doesn't take rocket scientists to figure, but I'm just saying is that's still in a good buy mode. And this is a thing that, as I said, I put that limit to get in, and I actually just left it there. And like I said, woke up a little bit late, forgot to set the alarm, but I mean, woke up just basically not quite in time, but pretty much. And when this price came in, I was hoping we would have seen this, and then we yanked down. It did go on and come into that area, but my concern is, as I'm trying to point out here, is that still that 57 was a good area. So I would have preferred to see this market. You see right here, like let's look at it on the 5-minute chart. So we came up here to 58, and I actually had the limit. I think it's like 57 and a quarter or something. So I got a little bit too greedy in a way, but we pulled back. I said that wasn't too bad of a pullback, but not a whole lot, because that was a pretty decent rebound for it to get to. If you look at it on the 5-minute chart, you see right there, that was a pretty good layer. You see there, right there's some resistance right there coming around the 56, 57. So we pulled back, but we didn't pull back much. Now, like I said, it's in quieter trading, but I mean, I should probably be seeing this market realistically around 35 and be kicking myself saying, oh man, I put my thing too close. And that's a bit of concern. And like I said, I was looking at this potentially as a head and shoulders, because it is after a pretty good rally. You see that? But you look at this, which would have been the shoulder, and this is on a 30 minutes, so it's not like it's on a 5-minute. And I would have preferred this then to have already come down here, make another move here, and then potentially break lower. So the fact that this is stretching out further than I would expected, looking like it's kind of, I wouldn't say it invalidates, but this market's holding up a lot better. I would have really expected to see us come back towards this 60-ish area. They got it up to what, 58, and seen us pull back down here. Should have come back at least down, right around in here. And we have it. And so it's holding up very, very well. So that's the take on that. And bear with me. What's up here? And let's take a look at where we stand here with FX. Holy smokes, we made up to 2085. We actually got some resistance right there. Actually, some key resistance just above. We're pulling back, but this thing is just, wow. They really flip people around over the last couple of days, and we'll get into that. Cable is sliding back below the 3382 after it got above it. So let's get into the news, and bear with me. Arena says, hello, Polly. Hello, Arena. And let's tag the news. Bear with me. And then we're going to kind of like talk about how these markets are going. Bear with me. Well, let's go with the Aussie dollar. The news there. Oh, wrong screen. There we go. So we're going to get to that also. And I'll reference what I mean about that in a few moments. But let's go and hit the news, and let's pull up the Aussie just for context. You can see here on the daily, and so the Aussie and New Zealand dollars supported, bonds beaten by strong economic data. The Australian New Zealand dollars hovered near multi-month highs on Wednesday, while bonds took a beating as surprisingly strong domestic data and more promising news on coronavirus vaccines underpinned risk assets. The Aussie was a shade firmer at 73.78. And just off a 3-month high of 74.08. It still faces stiff resistance at the September peak of 74.13, but a break would take it to ground less trod into or in mid 2018. The Kiwi dollar held at 70.57 after having reached 70.72 at one step, the highest since April 2018. The break of chart resistance at 70.60 added to the bullish outlook, though many technical indicators are overbought after weeks of gains. This Kiwi has just been bananas. Data showed Australia's economic growth rebounded by a record 3.3% in the third quarter as an easing in pandemic restrictions unleashed pent-up consumer demand. With the virus now all but contained in Australia, growth looks likely to be solid this quarter too. Yeah, we'll say that, man. I think they had like two back-to-back days, which doesn't sound like much, but I mean of zero cases. So I mean it looks like they've really wiped this thing clean as a whistle. Reserve Bank of Australia Governor Philip Lowe called the figures good news while noting there was a long way yet to full recovery. Lowe said he had an open mind on whether to expand the RBA's $100 billion bond buying program, and much would depend on how the economy fared, whether other central banks were still easing policies. Kim Mundy, a senior economist at CBA, reckoned the RBA would also have to reconsider its 1% basis rate target for 3-year bond yields if the economy continued to outperform. We expect the RBA will either remove or increase the target yield by the middle of next year, which will further support the odd in 2021, said Mundy. We expect the odd will lift to the 78 cents wow by year end. The upbeat data added to the selling pressure in bonds, which had already been hit by a sharp jump in treasury yields, renewed the possibility of a U.S. fiscal stimulus. Dang, 78 cents. Holy smokes. I wonder if she means year in 2021, not year now. But heck, that's still a pretty good move there, 78 cents. Let's go and move on. So sterling slips below 134 as the Brexit trade deal doubts emerge. The sterling dipped below 134 as doubts resurfaced on whether Britain can seal a post-Brexit trade deal with the European Union, offsetting any optimism by becoming the world's first country to approve the Pfizer biotech COVID vaccine. Sterling fell more than 4 tenths to 33.69 against the euro. It hit November 9 lows of 90.40 pence. The pound hit a 3-month high against the dollar on Tuesday evening after UK broadcaster Times Radio said the trade deal talks that had entered the tunnel stage of negotiations, but the mood switched among traders as EU's Brexit negotiator told the 27-nation envoys to Brussels that the difference persisted, according to a senior EU diplomat present at a closed-door briefing. Brexit retains an unmatched ability to induce knee-jerk reactions in the pound, and this morning's ominous story about the Michael Barnier telling EU ambassadors that 3 obstacles remain to a trade deal with the UK is no exception, said Renko Birch, head of market analyst at Monex. That development overshadowed news that Britain became the first Western country to approve a COVID vaccine. Is likely to start rolling out next week. Drink of water. And the dollar stalls as traders eye U.S. stimulus talks. The dollar stayed near a 2.5-week low on Wednesday as investors assessed the likelihood of a further fiscal stimulus in the U.S., while riskier assets held into gains as investors' confidence improved. Against a basket of major currencies, the dollar index eased at 91.19, near the lowest level since late April 2018, hit overnight. The euro and the Kiwi steadied after an overnight jump to a 2.5-year high as the dollar weakened growth on renewed hopes of coronavirus vaccine and the U.S. fiscal stimulus. Treasury Secretary Steve Mnuchin and House of Representatives Speaker Nancy Pelosi held stimulus talks for the first time since November 3rd election, while a bipartisan group of senators and House members proposed $908 billion worth of coronavirus relief measures. Pelosi said in a statement after talks that Mnuchin would review the coronavirus relief proposals. Senate Leader Mitch McConnell said Tuesday that the Congress should include a fresh wave of coronavirus stimulus in a must-pass $1.4 trillion spending bill aimed at heading off government shutdowns in the midst of a pandemic. President-elect Joe Biden told the New York Times his priority is getting a generous aid package to Congress even before he takes office in January. But traders were taking the reports cautiously. The currency, I don't know about cautiously. I mean, we did move higher. Now, I will say, because some people, I did see where this is on CNBC's Fast Money, they're looking like, oh, we can move, continue to move much higher. And my thought was, if the market looked like it was going to break a whole lot higher, we could have really gone beyond that 161%. But that being said, to say that they're just kind of like, I think that's a bunch of BS because we did rally yesterday on that news. The currency market is skeptical whether these proposals could be agreed in a swift manner since hopes were shattered once already when a stimulus package didn't come to fruition before the presidential election, said Masafumi Yamamoto. Also waiting on the safe haven dollar was weaker than expected. U.S. manufacturing activity and speculation the Federal Reserve will act to support the economy before vaccination becomes available. Jerome Powell and Mnuchin urged Congress to provide more help for small businesses amid surging infections on concerns that a vaccine may not arrive in time to keep more companies from falling. The next Federal Open Market Committee policy meeting is on December 15th through 16th. They're really expecting some fireworks of a bit as we come into that. That's something to really keep an eye on. Later on Wednesday, data including the U.S. ADP, employment data and U.S. employment rate are due. The Bank of Japan's deputy governor signaled the central bank's readiness to extend pandemic response programs, adding that the bank will take additional easing steps without hesitation as needed. Against the Japanese yen, the greenback changed hands at 441. The euro held ground against the dollar after strong performance overnight as it hit the highest level since May 2018. It fetched 2071. Looks like we have more. Analysts said the common currency could be pressured as investors grow wary that the ECB could act against the rapid rise. The ECB might comment on the currency, but I think it'd be difficult for the bank to stop the euro appreciation. It'd be hard to not favor the euro at a time when the Eurozone trade surplus and people are selling the dollar, said Imizumi. Sterling also remained near a 3-month peak against the greenback after Times Radio said the Brexit trade talks have entered the tunnel stage of negotiations. So enough of that. And we'll move into the analysis. Bear with me. And once again, let's pull up the economic data. We'll jump into that. So we do have Eurozone producer prices at the top of the hour. And of course, ADP at 8:15 Eastern with Canadian labor productivity, ISM at 9:45 Eastern, but that's New York ISM. So the big mover really is going to be ADP at 8:15. So we're going to get switched over. Just going to just take a quick screenshot of the economic reports coming into today. Mhm. So the euro flipped the script again. After looking like a correction, maybe afoot on Monday, because you know how we popped in on Monday and then we closed below 1941. The pair then rode the coattails of the U.S. equities on Tuesday and took out weekly level 2036 on the close. Resistance will be 2096 with support at 1984. So hence there's a 2096 I was referring to, that being above what we're at. I think the high was what so far? 2081? Well, let's see. This is 1984. If you look here. Yeah, resistance. The high is 2088 and we have 2096 as a level there. That's a weekly level going back. I mean, it's really not even a level. It's just where the market had peaked a couple of times in the past in a weekly. I think it's like about a couple of years back or maybe a little bit longer. I looked that up. So anyways, 2096. So I think we're a little bit overdone here because I think that equities are also a little bit overdone. Um, and I think that if we were really going full on with the whole stimulus trade, although the stimulus isn't what they're expecting. I mean, the market was expecting back then, which was 2.3 trillion. Even at the best, they're talking 1.4, and really, from what I saw, they were talking 908 billion. But once again, even if it was full on, we'd be much higher, and that's why I think that the market. I'm not expecting some big correction or anything like that, but I think would stall and pare back a little bit. But nonetheless, that's still stimulus, which would be bearish for the dollar. Let's go and move into the cable. So the cable finally closed above 33.82. You can see that on Tuesday. Amid wholesale dollar selling, immediate resistance is 34.81 with support at 33.54. Well, we've already pulled back. Holy smokes, we already put a pretty good pullback with that. Holy smokes. So anyway, so I've got 33.54. And resistance at 34.81. And let's go to the Aussie dollar. So the Aussie closed higher on the day following U.S. equities. The move did take out the recent highs, did not take out the recent highs. Resistance on Wednesday will be 73.86 with support at 73.09. On to the Kiwi. So the Kiwi has been amazing. For the immediate future, 70.64 will remain the set resistance, which the pair just closed just above by 2 pips. Support will be 69.96. So we actually even pushed higher. Look at that. Holy smokes. So 69.96. 70.64, but we did close above it and we did push a little bit beyond it. Not a whole lot. Let's see here. Kiwi, the high was 70.84. So we're still holding the 70.64. We'll keep that. And let's go into the dollar CAD. So the dollar CAD fell back on Tuesday, holding just above weekly support at 29.09, which will be support on Wednesday. With resistance at 30.09. So we had our support from yesterday at 29.46, but that weekly support, which we would reference, can't even talk, which we had referenced on on the Asian Act analysis for Monday, our support was still 46, but our weekly support is 29.09, and that 29.09 will be support for today. With resistance at 30.09. Moving on to the peso. So the dollar peso is trying to defend the 20-cent area each day. Support was at 20.06 that was taken out on Tuesday. Support on Wednesday will be 19.96 with resistance at 20.17. Onto the dollar yen. So the dollar yen finished Tuesday's session in the middle of the road, range-wise. The upside was stifled by the bias chart resistance from Tuesday, which was 463. It didn't quite make it up to the 463, but I think it made up in the upper 450s, or the mid 450s. But it says which will remain the same. So we'll keep the 463. You can see here. You can see that the market is currently at 464. Might have gotten just a hair above it. The high is 470, okay? And support will be 408. Onto the cash dollar index. So the dollar index finished in the 91.20s. Last week, we expected to run into this area if we saw stops taken out sub 91.94. If you remember, I've been saying that for about a week and a half. If we take out 91.94, I thought we'd get to around 91.25. I thought we would languish, and then eventually we'll come down to about 90.80 and kind of trade in that range. Well, we did make it down. I mean, we're a little bit lower now, even then. When we dipped, but we're in this area. So we're at 91.33 right now. I think the index will temporarily hold this area before eventually moving to 90.80. Support on Wednesday will be 91.16 with resistance at 91.70. And I think the low's been 91.11. 91, yeah, well, 91.11. So we have 91.16. And upside 91.70. On to the cross rates. Okay, holy smokes, man, this thing's still going higher. Sheesh. So we had 73.58. Look at this thing's blowing and going. So we have to go to a weekly level on the Kiwi yen. And that would be, actually, this is pretty good right there. 73.90. It's above it. And that close right there is 74.01. Yeah, we'll go with 74.01. Daily, right there, this high there, which is 73.43. This thing's on fire. Holy smokes. Euro pound. You can see they made a stab up in here towards this 90.56. We had 89.68. This thing is just all over the map. This is odd. I don't know. Well, I guess, yeah, we look at that. We did dip. We came all the way back up. Boy. So you see this close right there, that body? That's 90.44. With support, let's go with this body right there. 90.08. Now let's go to that lower part of the body, which confluences right here with these wicks. So 90.03. Onto Euro odd. We saw that continuation move here. And same thing here. We'll look at this body here, right there, which comes in at 63.97. Boy, really kind of bounced around. And then this level right here, 63.17, which they tagged it, but I think that will hold overall. Finally, this thing woke up and support on the Euro Kiwi 69.58. We'll keep that there. Actually, it's going to be still this pink line. You can see they actually took off. So right above there, if you look here, let's take a look at a 2-hour chart. There we go. See the touches right here, these two bodies, and go just a hair lower, which is going to be 70.32. With resistance, see right here coming across, 70.79. Onto the Aussie yen. Man, this Aussie's something else. Same thing here. You see these bodies right here and this one right there. But if they're going to break higher, that would be resistance, 77.40. And support, we did break out. So let's go right there, right across that body, which would be 76.76. On to the guppy. Same thing, push higher here. We do run out of gas. Look at these wicks right there. See this body, that wick right there. That's B resistance, 4063. And support this high right there. Confluence here with this low. That high is 39.43. And lastly, with the starting odd. Pretty good pullback. I'm going to go right here with this body right there and these two wicks right there. Let's on the extreme move is that last wick. The body's in this wick here, which is 80.67. And resistance right there with this body right there, coming across in that body, 82.01. We are starting to fade a little bit more now, 20.57. And the Nasdaq is still holding around here. There's 24.41. So I had looked at here at the dailies on here. You can see here on the on Apple, we got above the 121. So you got to respect it. You know, I don't know if it can make it to 124, but it certainly has momentum. Now look, Microsoft came up here, but it's stalling around this 216. It's not want to say it's stalling, but it's made up here, key level. And look at Amazon. It's here. That's what I'm thinking we could. I don't know if we won't get much of a pullback, but we can stall, which allow a little bit of a dip. You can see Google popped up here to 1821, caught basically 1822, and we dipped back to 1795. Nvidia here, some resistance right in here, which is 540, 539, but the real key resistance 551. Take a look at Facebook. And this was key because we did break above this 278. And we take a look at Netflix. Same thing here. I mean, up here above 506, but we've paired back a bit here and Tesla. So my thoughts are we're a little bit stretched here, and we could take a pause. You still have to respect the upside. With Apple, Apple's been basically driving the bus like nobody's business. So got to allow for Apple. Let's take a look where it is on a pre-market. Let's see. So it's right now at close at 122.72. Where is it in pre-market? Well, we're holding around that area, 22.50 now. I think, let's take a look at Microsoft pre-market. Close 216.21. Oh, we're 216.50. You see that? Amazon closed at 32.20. Pre-market holding 32.20. Hence, that's what I'm thinking. Let's take a look what Facebook is. Close at 286. This is huge because it jumped above this level. You see that? And you know how much I say that Facebook is a momentum mover. It really gets the movement going in the others. And of course, obviously in Nasdaq. So we close at 286.55. We're currently at 286.17. So we're still holding there. So they can still kind of, you got to give them the upside. And so when you look here, you see how it's still holding up in here. So maybe we can make that move up to the 264-ish, maybe 270, and then kind of pull back. I think, I mean, we can come up in here, I think, and then kind of stall. I don't think we're taking off to the moon or anything, but I think we can kind of hang around here and stall, and then maybe see this thing start to pair back. And Mary asked about platinum. Wow, solid move here in platinum. Take a look on the weekly. Well, we said if they can get above, wow, they are really still pushing higher here. But I think the platinum it's the stimulus trade too. And that's what got things really going. Look at that. Solid close here and getting this thing pushed higher. Go across these wicks here. You see that? And that's resistance at 1,000.6 and currently we're 1,005. So we're holding up okay. So you got to look at it that sense. If you look at it on a 2-hour chart, you see this wick here? That's 1,011. So, yeah, things can have a tougher time. You see this wick here and this wick here. See that? That's 1,011. So that's going to be key if you can get above 1,011. And okay, because I was on the other screen. Okay, so here's the platinum. You see here, and you see these two wicks here, right there and there. That's 1,011, and we're just about there. That's going to be resistance. You see right there, these two wicks coming across, 1,011. And this last one is going to be natural gas. We're just still kind of hanging around in here. But so I really don't see anything. Look, we saw a pretty good strong move on Monday. Then we kind of gave it back on Tuesday, and we're just kind of flat here in natural gas. But once again, just to recap on the platinum, 1,011, and it's really reacting to the stimulus trade. But that 1,011 looks pretty good. And if we were to close up in here, this would be like a hanging man. It's still early in the session, but that 1,011. Okay, well, that'll be it. We'll see you in the chat room, and thanks for joining us here on the European Crossover webinar.